right? So we've got, I think the JOLTS numbers are also scheduled to come out later today at around 10 a.m. Eastern. I might have to double check, but we've also got ADP numbers that were released earlier today at 8:30 8:30 a.m. Eastern. We did have the ADP numbers, which I'm going to go over, and JOLTS numbers, like I said, come out at 10 a.m. Eastern. So lots of focus on unemployment as well this week, as well as the FOMC announcement and the Federal Reserve Chairman Jerome Powell's speech. So ADP numbers coming in at 113,000. So a little bit of a softening in the labor market. So consensus was 145,000. So we did certainly see a bit of a below expectation number here from the ADP numbers, but JOLTS is going to be very important. I will be doing a separate video going over that in more detail, and there will be another live stream on Friday to go over the unemployment numbers as well, because again, that's also going to be very, very important. It's going to give us a little bit more insight into the overall strength of the economy and the labor market as well, because that's really what the Federal Reserve is focusing on right now, is that they want to see some weakness in the labor market, or softening, I should say, in the labor market. So once again, thank you so much for joining. I hope you all are doing great. I actually posted a video on Paycom as well. Paycom stock is down a little bit over 37%. So an entire analysis on that company is already out there. I think that video just went out earlier, just a few minutes ago. So definitely do check that out as well. But let me know in the live chat if the audio and the video is working well. Just want to make sure that there's no technical difficulties. And this right here is the meeting calendar. So today is the big day, November 1st, is Jerome Powell's speech, and the statement will also be released. Now, what's interesting that I wanted to mention, I'll just wait a couple more minutes until people confirm that the audio and the video is good. And once it's good to go, then we will get started. I've got I tweeted something about the markets not really going anywhere over the last 3 years. Practically, the NASDAQ is practically at the same level as 3 years ago in December of 2020. Volatility here continues to slide lower, just a little bit under 18 right now, so down about 88 basis points, and crude oil is seeing a little bit of that bounce back higher from that support that we talked about at close to low $80 per barrel for crude oil. Perfect. So all right, let's see. All good. Audio, video, good. Good. Audio, video, perfect. So this right here is what I tweeted just a few minutes ago, basically talking about the NASDAQ is practically at the same level as December 2020. It's been almost 3 years. In December, it'll be 3 years of no returns from the NASDAQ, right? In those 3 years, we've had the Federal Reserve increase rates 500 basis points. We've had the public debt, so that's the total debt in the U.S., increase $4.6 trillion. Yields are up 450% to almost 5%, and oil is up 83%, and dollar is up 20% as well. Is this, or will this be the lost decade that many people were expecting in 2020, from 2020 to 2030? Will this actually eventually end up being the lost decade for the market, right? Is a real question, because as shown on this chart, we have practically gone nowhere. Yes, you can make an argument like we're slightly higher, up 3%, but for the most part, we are basically, right, 12,850 is where we're at, and the NASDAQ was almost at that same level, pretty much at that same level 3 years ago. Now, all these things, right, are making it more and more difficult and more challenging for the markets to see any type of momentum, because a lot of these things haven't happened in such a long time. The last rate hikes we saw back in 2019, 2018. So it's been a while, and the public debt obviously is a much broader, much bigger issue for the U.S. economy, and the constant issuance, which is driving the yields higher. So with that issuance, the yields have gone up over 450%, and that in itself is causing a lot of volatility and making it difficult for the markets to see any type of momentum, right? Oil is up 83%, which definitely did play a significant role in inflation going higher, and the dollar being up 20% is also putting a lot of pressure, especially on large cap tech, because over 60 to 70% of their revenues come from non-US countries, non-US dollar denominated countries, and for that reason, if the dollar is strengthening against other currencies, well, that's a problem, because once they convert those earnings back to US dollars, the growth is not as high as what you'd expect if they were earning in dollars, right? Because that's again a bit of a problem. So All these are reasons, all these are things to keep in mind, because the market's valuation, of course, has been in question. Right now, we're a little bit over 19 times earnings on the S&P 500, which I guess is not bad from an historical average standpoint, is actually quite reasonable. But is the market undervalued or overvalued right now? Can be debated. I would argue that it's somewhat fairly valued. My fair value is at closer to 4,000. So I could argue that maybe we're leaning a little bit more towards somewhat of an expensive market at 4,200. But then you've also got a lot of individual stocks that have just been on this straight sell-off since July. So earlier I showed you guys, since the 3 years ago, since December of 2020. But since July, even since July of this year, the S&P is down, over 9%. The NASDAQ is lower, I think over 10, 12%, 11% right now. And since then, crude oil is up 20, 30%. Dollar index is up 9.5%. Yields are up since July. So all these things that have happened in the last 3 years have also happened in the last 3 months that are, again, making it difficult for market to see any type of momentum or find some type of solid ground. Initial thoughts on AMD earnings. Kevin, I've got a video coming out later today. I've already recorded it. It's scheduled to be released later today. That's going to be going over everything for advanced micro devices. They mentioned the word AI. Can anybody guess how many times Lisa Su and the management team mentioned the word artificial intelligence in their earnings call? Not only AMD, but including the analyst. How many times was it mentioned? I want to see if anyone can come up with a nice guess of how many times AMD and the analysts, including analysts, mentioned the word AI in their earnings call. And I want to see more participation, folks. Like, I'm doing this live stream after such a long time, and the chat room is so quiet. Like, come on. Today's the big day. We've got the Fed meeting. We've got PayPal earnings. We've got AMD reported last night. It's gotta be more exciting than that. It's not the weekend. It's not even the start of the week. It's the middle of the week. So let me know. All right. So non-nickname says over 100. That would be a lot, right? That would certainly be a lot. But let me know how many times you think AMD management team and the analysts mentioned the word AI in their earnings call. We've got 85 as a next guess from Vault. And also, we do have the poll going on right now, so do participate if you expect the markets to be higher or lower today. Of course, we got the big Fed meeting, so that's going to be hanging over our heads for the remainder of the day, and there's going to be some volatility in the markets as well. All right, so just two guesses so far. 185, that's it. 25. TMF Caddy had a quick run up. I'll take a look at that. So Janie says 23. It's a reasonable guess. Let's take a look at TLT right now. Pushing up 0.49%. TMF is up a little bit over 2.2. That's, because yields are rolling over a little bit, down about 1.3, so back under 4.9% at the moment. 420, 41. So the number was 58. 58 times is what they mentioned between AMD's management team and the analysts themselves. Combined, mentioned it close to 58 times. So if you say so, you're closest. I would say 46 is the closest to 58. Counting days, can I ask if sell a put on the day of expiry? I am on a negative balance. When I'm assigned, will I still take the loss? So if you are selling a put and you are on the day of expiration and you have a negative balance, well, that negative balance for that position might only just suggest, well, it depends on a lot of different things. Where's your strike? Where's the actual price? We can go over that in real life if you kind of share more details on what that stock is, what the strike is, what the expiration is, and all those things. So I can go over that in more detail. But you will get assigned if it's in the money after the market's close. You should see that as a position. And the negative balance would simply be the unrealized loss that you have on that stock if it's below the cost basis of that option, right? So for example, if you sell a put at, let's say, $100 strike and you received a $3 credit or premium, then your cost basis will end up at $97 after assignment. And if the stock is trading below $97, then of course you'll have a negative balance showing you the unrealized loss on that position. And that's probably something that you are seeing at the moment. And that's just going to turn into an unrealized loss after the assignment. Comments on O. So I actually picked up a lot of O yesterday. I think that the new acquisition of Spirit, I think it is seeing some momentum downwards. But, yesterday's, weekly candle looks absolutely fantastic. And, this is a little bit over 6.5% dividend yielding stock. Very, very long standing dividend aristocrat. And if you take a look at Spirit, what was the full name for Spirit? So Spirit Realty Capital, right? They did rally quite a bit on the news that they are being acquired. So their portfolio kind of fits well with Realty Income Corp, right? So they've also got a lot of retailers and a lot of sort of companies that kind of fit very well to Realty Income Corp's portfolio, because they also have things like Dollar General and Home Depot and Walgreens and 7-Eleven. A lot of these companies kind of fit really well with their portfolio. So, and they also have over a 98% occupancy rate, with very strong, like I said, portfolio of companies that lease from them, and they are all triple net leases for both of these companies. So I think it's a good match. But yes, Realty Income Corp ended up paying over $9.3 billion, I think was that final number, for the acquisition. So, maybe the market doesn't like that. So this is right here. Spirit Realty stock rallies on $9 billion buyout from Realty Income Corp, and $9.3 billion ended up being the final number, which I think has been updated from like $4.4 billion was the original number, which is now 9.3. So the market may not like that, that Realty Income Corp is shelling out a lot of cash to buy and make this acquisition happen. But like I said, it's a good match in terms of the companies that they both have. And I think Realty Income Corp is also kind of reaching out for maybe a little bit of a higher yield, and it's starting to now look into opportunities in the casino business as well, and maybe some of the other markets when it comes to triple net leases and commercial real estate. So they are going to be reporting earnings on November 6th, so next Monday is when the earnings come out. But I think this is a phenomenal REIT, and I will be adding more shares at 6.4% yield. It's too good to pass up right now. Okay, so Paycom video just went out earlier today, so definitely do check that out. I did a video. So Boba, you can find all the comments on Paycom's analysis in that video. I think the biggest risk for Paycom was the multiple compression risk, because they were trading at a little bit over 32, 45 times earnings multiple. Now they're down 40%, just brutal. But in that video, I also go over my intrinsic value. I go over the fundamentals of the business, everything, revenue, earnings, cash flows is covered in that video. So definitely do check that out. But, down almost 40% at the moment is obviously brutal because of a 50% cut in guidance for next year. In other words, the growth rate cut. So they are now expecting growth of 2024 between 10 and 12%. Versus analysts, they were modeling in for 21%. So we definitely did see a significant cut in revenue guidance, and profitability for the upcoming quarter was also lower than what Wall Street was expecting. So, guidance is everything. And that's exactly why PayPal is going to have to provide some pretty solid guidance into the fourth quarter. And if they only reiterate the full fiscal year guidance for 2023, I think that alone should suffice, restoring some confidence among Wall Street. But if any reason they cut guidance, that would be brutal. I think that would be the most brutal scenario for PayPal if they end up cutting guidance. But again, I did both of those videos earlier today, so definitely do check that out. So Nikki, great video on PayPal Caddy. What time is the earnings call? So I think it's going to be closer to 5:30 p.m. Eastern. Let me just quickly take a look. Investor relations. So here we go. So 2 p.m. Pacific is what it says. So that's going to be, I think, 5 p.m. Eastern, right? 3 hours ahead, New York is from Pacific time. So 2 p.m. Pacific is what it says is the earnings call. But of course, earnings will be released after the markets close, and the earnings call will take place at 2 p.m. Pacific. So we also do have the JOLTS numbers, folks. We have the JOLTS numbers coming out, which are going to be just as important as the unemployment numbers, because this is really what's going to dictate how many job openings we have per unemployed person. And that ratio that we've talked about on the channel time and time again is what really needs to come down over time, so that the Federal Reserve starts to feel more confident that, okay, their interest rate hikes are softening the labor market, which could potentially start to lower inflation faster. In our previous updates and analysis and market live streams, we've talked about that it's a lot easier for inflation to go down from 9 to 4%, but it's a lot more challenging to go from like 4 down to 3, down to 2, down to 1, right? And I think the best analogy I've given in the past I don't know if that's the best analogy, but it's kind of like, if you're trying to, let's say, lose weight, it's much easier. And if you can consider the body fat percentage as the inflation number, it's much easier to go from like 20 down to like, let's say 12% body fat, but then going from that 12 down to 10 or 9 or 8 becomes even more and more challenging and more difficult than the original 8% or 10%, right? So I don't know if that's the best analogy, but it is a very similar concept because the Federal Reserve needs to, again, be on that interest rate hike or that policy path to make sure that inflation stays down. And that's something that I think a lot of, especially on the media, they're having a hard time kind of understanding, is that the Fed's objective isn't to bring inflation down, right? The Fed's goal is not to bring inflation down. The Fed's goal is to keep inflation down. That's more important than just seeing inflation come down and then starting this interest rate cutting cycle. Because if they do that, they're literally just going to be repeating what's already happened in the 1970s and 80s. Not once, not twice, but 3 times this has happened, where the Federal Reserve decided to cut rates when inflation came down, and then what happened? Months later, inflation spiked to a more aggressive higher high and just went absolutely crazy because of those interest rate cuts. So if the Federal Reserve has learned their lessons, which doesn't usually happen, but if they have learned their lessons from the past, and Jerome Powell has also mentioned this time and time again, that we want to make sure that we learn our lessons from what happened in the 1970s and 80s, and we want to be on inflation until it's actually down and it stays down, then the ideal path would be to keep interest rates higher for longer and then cutting them in a periodic fashion to make it more aligned with where expectations are. Now, this is only unless the economy starts contracting pretty aggressively, unless we start to see unemployment start going higher pretty rapidly and we see a brutal recession, let's say at the end of this year, early next year, then the Federal Reserve will be in a bit of a jam where they need to figure out, okay, are we stimulating the economy now to help support growth and recovery from an economic standpoint, or are we going to continue on our battle to bring inflation down? In the past, the Federal Reserve has prioritized recession more than inflation, which is exactly why in the 1970s, 80s, when we did see recessions, the Federal Reserve cut interest rates, and that resulted in inflation going back higher. So they prioritized fighting recession more than fighting inflation. This time around, I think it's the exact opposite. I think the Federal Reserve is going to focus more in bringing inflation down and keeping it lower than prioritizing helping boost the economy and helping fight the recession. So that's the key difference from 1970s and 80s, and that's exactly why I think interest rates can stay higher for longer, unless, like I said, it becomes a situation where the Federal Reserve then needs to make a decision, which is going to be a hard decision for them, if we go into a recession and inflation doesn't come down. Then we're talking about the fourth quadrant, right? We're talking about actually the top right quadrant of that monetary policy and that dual mandate, which is the worst place to be, right? Unemployment's high and inflation's high. Their dual mandate are higher. So then they have to make a decision. Okay, what are we really going after here from a monetary policy standpoint? So that's where we are. So Tom Caddy, are you buying Enphase at this level? So yes, the only thing I'm waiting for is rate cuts, right? All the things that I just explained right now and just mentioned. Because look, we know, and the CEO specifically mentioned that we're seeing a slowdown in demand because of higher interest rates. And my previous updates and videos and in our Discord, I've mentioned that, look, there's companies like Tesla, Enphase, even Nvidia to some extent, I would argue, they haven't seen interest rates as high as they are in a very long time, right? Yields haven't gone up to over 5%. And if you simply consider financing cost and borrowing cost for vehicles, for houses, for solar panels, like everything has gone up significantly to a level where consumers now are going to second guess their decision of buying a new electric vehicle, buying a new phone, buying a new solar panel or solar system. Just those types of decisions will will hurt the demand. And that's exactly why the market, since it's forward looking, it's pricing all that information in, and the stock price performance is what it is. If you simply look at the numbers, right, the fundamentals of these companies on an absolute basis, still good, still growing, deliveries are up, revenues are up, profits are up, but it's just that forecast from Wall Street, which is, okay, if interest rates stay higher for longer, that's going to put more pressure on demand, which is going to lower potential demand for these companies, which is going to lower revenues and earnings going into next year. So really what I'm waiting for as a cue is when do we actually can expect interest rates to come down? And that's the analysis that we need to run for a lot of individual stocks, for a lot of growth stocks, for bond trades. Everything's kind of dependent on that one piece of information, which is, okay, where are rates going to be 12 months, 16 months, 18 months from now? It's a little bit of a macro call, but until I have more visibility, I'm sitting tight, and cash is paying a pretty good 4 or 5% return. I did pick up some realty income, like I said yesterday, because 6.5% is too good to pass up. And especially, now for Realty Income Corp, the yield to cost potential is very high as well. And what I mean by that is that if they're going to raise their yield, or they're going to raise their dividend amount, to keep it consistent with what they have done in the past, and the stock rallies, let's say 40, 50%, then, at $68, if they yield at 2.5%, 3%, and they're going to raise their dividends, what I'm focused on is the dividend amount per share divided by my cost basis per share. And that's going to tell me my yield to cost, which I think is going to be far more important than the actual yield itself. And that could be at 10, 12, 15%, 20% over the long term, over a 5-year, 10-year span. And that's really, I think, is the opportunity with Realty Income Corp over the long term. So that's the focus at the moment. Anyway, any thoughts on InMode earnings tomorrow? So yes, InMode is also reporting tomorrow. I did a video on them, of course, not too long ago, but I also did share some additional analysis in our Discord, which basically said that even if InMode grows at 3% free cash flow over the next 5 years, their fair value is literally at the price that it's trading at today. And that's a 12% discounted rate that I've used over the next 5 years. So that's where we are. InMode, I would argue that trades at a extremely, extremely low valuation, and at $650 million market cap, I will most likely, and that is, again, it's going to be a very bold statement, but if InMode drops down to 650, close to $700 million market cap, and considering that the growth and the revenue and the free cash flows are growing and they're still unchanged, I will most likely make InMode my biggest position, because it would be trading at its net liquidation value, meaning that if you kind of dispose everything from the business, you just liquidate everything of InMode business tomorrow, it'd be worth $650, $700 million, because that's how much they have in assets and cash versus liabilities. So that's going to be what's left over after everything. And if it's trading at that level, that's to say that, $100 is trading at $100. That's what that means. So the market is not pricing in any potential or any value on the business on top of its already book value, which is the cash and the assets. That's a pretty strong statement for the market to make. Not a lot of companies trade at their net liquidation value. It's very rare for a company in this market environment to be trading at its net liquidation value. If you find something, definitely do let us know, because it automatically becomes like a no-brainer opportunity, right? Because it's like finding $100 trading at $90. That's what it sounds like if it's trading below its net liquidation value. All right, so nice to see you. The thing is that the Christmas season companies hire extra people, so this might affect those numbers as well. Any thoughts on CELH going into earnings? Celsius, this has been one of the best performing stocks, hasn't it? In the last, no, actually I'm thinking of maybe something else. Yeah, I'm definitely thinking of something else. But very strong performance coming in since 2011. Or it might be this one, $152. Yeah, since 2013, in the last 10 years, the stock's up like 90,000%. Yeah, this might actually be the best performing stock that we have looked at. 44% year to date. The only thing that kind of concerns me valuation is okay. Like 13, actually it's high. It is really high. 13 times sales, 113 times cash flow. So those are definitely very, very high numbers for Celsius right now. Anyway, so market's going to open in about a couple minutes. We are ready. 1.6% move higher for Tesla at the moment. Microsoft's up 44 basis points. Yields are starting to roll over a little bit. And there's one spread that is already positive. That's the 30-year minus the 2-year. And PayPal here, slightly down 12 basis points. Let's take a look. NVIDIA up over 29. AMD, or Meta's up 23. We got Google flat. Apple flat, or this is the entire Magnificent 7, Magnificent 8 stocks. Microsoft slightly higher. Amazon's up. AMD is going to be up now. So AMD has recovered all of those loss from yesterday after the earnings, and it's now starting to push up. And Netflix here slightly up. Apple also slightly pushing higher, but more or less very, very flat start to the day, and that's very normal for a day when we have the Fed meeting. So that's where we are. 27 basis point increase in the QQQs, and SPY right now also up 26 basis points as well. So technical rebound, again, is something that we can expect from the markets. We're going to end this poll. 60% expecting the markets to be green today. Kevin, yes, Apple earnings preview. We'll do a video on that as well very, very soon. Been a while, Abhishek. Yes, I know it's definitely been a while. What price did you buy in mode? I think it was in the mid 20s. I think it might have been 24, 25. I have to double check, but it was around that level. It was, I think, only 75 or close to 100 shares. So not a pretty substantial position, but we'll definitely be looking at adding more as soon as the selling pressure kind of exhausts itself a little bit. Caddy, going to report FNT stock. Do you want to buy at this price? So let's just run through some very quick discounted cash flows for these companies, right? So let's just do Fortinet, for example. And Fortinet right now at $170. And if you take a look, right, phenomenal company, no doubt about it. Excellent, cash flows, excellent earnings, very, very good fundamentals. So if you come over to the annual numbers and if you look at statements and cash flows, trailing 12 months sitting at just under $2 billion, right? That's a number that we can use when we do our analysis for, let's say, Fortinet. So FTNT, I'm going to plug in 2,000 here and 14% growth rate, or let's just try to match these numbers. So we're going to update this to, let's say, 16 or 18, 20. Let's just do 24. Let's do 23. There we go. So 23. So now the fair value is matched with the current share price. So what that means is that Fortinet needs to grow their cash flows by 23% over the next 5 years in order to justify today's valuation and still get us a 12% discount rate. In other words, 12% rate of return over the next 5 years as well. And terminal growth rate is going to be 3%. But I think 23% is a little bit too high for the company. So let's see. Let's just see if we can do some very quick analysis. And we can do some other stocks as well. But I just want to quickly run through for Fortinet, because I'm also interested in Fortinet. So I want to see, how well the company has grown cash flow. So if you could see, levered free cash flow has gone from 96.4 million, that's in 2013, to over 1.5, 1.8, 1.6 billion, right? So let's just plug in some numbers here. Do 97 and 1600. 2013, and we'll do 2022. We'll just do dollars for now, just for quickly. Rates. So we're looking at 37%. So in the last 9 years or so, free cash flows have grown at 36.5%. So yes, it is possible that they do grow this, by 23% over the next 5 years. But again, as numbers get bigger and bigger, it becomes more challenging, more difficult for companies to grow at that size and scale. So for that reason, I think, even if you go with, let's say, a reasonable 16%, then $44 is going to be that fair value for Fortinet. And I think that's been my sort of intrinsic value for Fortinet in the low 40s. Low 40s has been kind of like the level. And there you go. So this is the green rectangle that I've been watching for Fortinet for quite some time, right? This is the area of support and area that I've been paying attention to in the $42 to $47 range for InMode. For Fortinet. So, all right, welcome everyone. Thank you so much for joining. Everybody who's coming in now. So, futures are ripping. EXTR getting hammered pre-market down 20%. We'll take a look at that. MTB, last I checked, it was trading at 8 times book value. So, we'll take a look at that as well. That seems quite interesting. So, shorting cat now. Can't you see sometimes your words just hypnotize me? Let's take a look. EXTR. Wow, but getting bought up here intraday. A pretty strong rally of 8.5, 8.6% intraday here. AMD, look at that, up 2.7%. A very, very nice recovery and strong move back over $100. AI may have something to do with it, considering how many times they mentioned it in the earnings call, over 50 times. So, it's possible that it ends up, up 3-4%. I've got a video coming out on AMD later today, so that's going to give you a little bit more insight and also go over the intrinsic value for this stock as well. So very quickly, this is where we are for Magnificent 7, Magnificent 8 stocks. I mean, one could argue that this is a very nice, strong bull flag in formation for Magnificent 7. So this is all, Apple, Amazon, Tesla, Nvidia, Meta, Google, and Microsoft, all companies included into one index. And what we'll see is that consistent, lower highs and lower lows last year in 2022. So we basically kind of followed this path of lower highs and lower lows. Then a very nice V-shaped recovery, right? So just absolutely ripping on the back of Meta, on the back of Tesla, on the back of Nvidia, just pushing higher. And then more recently, since July, like I said, dollar index is up, oil prices are up, yields are up. It's made it more difficult for the markets to rally, and more specifically, the big tech, large cap has also been consolidating sideways in this range for some time. Now, this could, like I said, lead to a bigger breakout. That is to say, if we hold up certain levels, but the Nasdaq isn't making like a bull flag. It is still in this downtrend with a nice possibility for us to see a technical rebound back up to this lower high levels at 13,500, 13,600 levels. Hedging PayPal before earnings, not quite, because my cost base is actually quite higher. So even if I do sell the covered call, I mean, I wouldn't want to do it below my cost basis. That's like rule number 1 for selling covered calls, is to sell with a strike that's higher than your cost basis. So if I do, then obviously there's a risk of getting called out on my shares early, and I would have to basically realize the loss. So I don't want to do that right now. But yes, I'm definitely watching very carefully. Tristan, what do you think of the arguments of higher PE from Tom Lee? So what is the exact argument, Christian? Because I've heard multiple arguments from Tom Lee on the price earnings multiple. But what did he say? Is that something he said recently? I think he mentioned something about big tech, right? Large cap tech and big tech being very strong, and I think rallying into the end of the year. And I think he also talked about how the next couple of years can be very strong for large cap and big tech. Scared of PayPal earnings, David says. SMCI up over 3% going into earnings. Yes, Supermicro, I've got a video coming out for them as well. It's going to be a busy week for me, for sure, because we've got lots of earnings coming out. So, I've already talked about AMD. Video is going to be released today. Paycom, already the video's out. Did a video on PayPal. And then later this week, we'll be talking about Palantir. Of course, we'll shift our focus to Shopify, Eli Lilly, Novo Nordisk, Apple, Supermicro. I think Qualcomm's worth discussing. And then Airbnb also, I think, is going to be an interesting one. And then I haven't done a video on SoFi. Maybe I should do that. SoFi and OneSemi, I think, is couple more interesting stocks that I've already reported that I think I need to get around from doing a video very soon. And then, of course, not to mention Fortinet. Fortinet's a big one. So yeah, if you have any companies in mind, let me know, and we'll do a video or we'll have a discussion in the Discord for them. When is the Fed meeting? So today at 2:30 p.m. Eastern, I will be live to cover their speech. Rajat, selling team Atlassian results tomorrow. Yes, Atlassian is actually a stock company that I just recently learned about, only because working with developers right now, and Atlassian is a very good project management tool for developers, and they are reporting tomorrow, huh? Doesn't say. I don't see the logo here. Maybe I'm looking at something else, but yes, team is the actual ticker symbol for them. And this is also actually quite an interesting company. Not profit making yet, but has the potential, right? 46 billion market cap, selling off since October highs, still nowhere near close to its all-time highs. Actually ended up being down 78%. But this is going to be on the watch list for further analysis because I think it's got potential, but we'll definitely analyze it. So Abhishek, yeah, and look, that's the thing about stocks and companies in general, is that price action will be volatile. It will be wild, but the company fundamentals, I mean, as long as we're looking at high quality businesses that are profitable, that have a lot of cash, little to no debt, that are growing in revenues and earnings, even then, right? Even if you check off all the boxes, there may be a few that Wall Street doesn't like, and you're going to see a significant amount of sell-off, like we have seen with PayPal and Enphase. But if you just look at those businesses, I mean, they're not terrible companies by any means, right? They're not companies that are on the verge of bankruptcy or anything, right? They're very strong companies with great fundamentals and businesses. It's just what we're seeing right now is the price dislocated a little bit compared to company earnings and fundamentals for these companies. So, and that will happen from time to time. That will happen from time to time. So the Tesla breaks support here. So let's take a quick look. No, we're still above $200. I mean, we briefly did breach $200 yesterday. I think we came down to 192, but then it got bought up fairly quickly. 194 was the low. Then buyers stepped in, and we're back over $200 per share. But it does look weak. I mean, it looks very weak. Nvidia looks a little weak, coming down to that support, breached down to as low as $392. But then, of course, quickly getting bought up. And if you do see weakness in our technical analysis, like we've talked about, there's a lot of stocks that are showing signs of weakness that are making lower highs and lower lows. So if you do end up breaking down, that's going to take down the S&P and the NASDAQ with it. If you validate that support, if you hold up that support, then, of course, it's possible that we do see that technical rebound and some recovery back up. Just says in general for the market. Gotcha. So, yeah, I mean, it depends how you kind of spin the numbers, right? Remember the video that I did where inflation's at 0%? Inflation is indeed at 0% if you take CPI excluding food, energy, transportation, shelter, healthcare, apparel, airline fares, everything. If you pretty much exclude everything out of it, yes, inflation's at 0%. It's the same thing, right? I mean, if you just take out big tech from S&P 500, the valuation might actually be at 14, 15 times. But that's not a solid argument to say that markets are cheap by any means. That's what makes the market, right? Big tech is a big contributor to the overall revenue and the earnings and the weighted average, the way it's structured on a market cap weighted basis. That's what makes the overall valuation. So to say that markets are cheap or undervalued if you take out big tech, I think it's just like cherry picking the data, and you have to look at it as a whole. Yes, you can make a case that, okay, what would be a better argument is that if you take technology out, or big tech, Magnificent 7-8 stocks out, the S&P 500 is undervalued. So there's opportunity in other stocks and sectors because that's where the undervaluation is coming from. But to say that when you take big tech out, markets are cheap, so therefore by the market is kind of false, in my opinion, because overall valuation is still at 19, 20 times earnings. Timothy, how is it possible that Enphase drops 40% in 2 weeks? Anything is possible, man. Anything is possible in the markets, right? You think you've seen the craziest things? Think again, because in your 40, 50, 60 years of investing or trading career or journey, you're going to see pretty crazy stuff in the markets. Things that nobody believes could happen will happen. And this is pretty much discussed in Ted Seitz's book, Capital Allocators. And, it's when something goes wrong, it's not because we didn't plan for it. So it's not like a failure of planning, but it's a failure of imagination, because our minds can't imagine. Our minds can only imagine up to a point where what's already happened in the past, right? So we look at the past, try to extrapolate the future from the past, and we think that, okay, in the past this happened, so this is what's most likely going to happen in the future. But most of the times, the future is, there's those events that happen that are way outside of our imagination that obviously takes down the market to more brutal levels. And for example, COVID, right? This is a 1 in 100-year event that definitely affected the market. And more things like these, both on the good side and on the bad side, will happen that are going to be outsized. All right, how is Enphase doing today? Down another 5%. There we go, $75. There's a lot of technical weakness, so I think it's possible that, $59, $60 is where it ends up settling in at. It's going to be 20% more lower than where it is at the moment. Man, the price earnings multiples is going to get collapsed here for this company. So if you come over to, let's just add the PE multiple. Let's just do indicators. We'll do priced earnings. Yeah, 19 right now. So this is where we are. This is the lowest price earnings multiple Enphase has traded at since 2020, before it basically started pushing higher, right? So we're right now at under 19 times earnings for Enphase. And if you account for, let's say, $4 next year, yeah, 18.75. At $60, it will settle in at around 15 times earnings. Yeah, the dip keeps on dipping. Do you think the Enphase is priced at a point where the market is pricing in higher rates for longer? Or do you think the room to fall if rates stay higher for longer? So I think to this extent, we are pricing in rates higher for longer. I think that's really where the majority of the thesis is coming from, because of a cut in guidance and the revenue and the demand. All that's kind of coming from the fact that rates are going to be higher for longer. And for that reason, I think $60 is where it could really settle in at. Where there's a lot of resistance in the past. Next support for Enphase is also at $60. So another breakdown. And technically, when something becomes really weak, it can accelerate very aggressively, regardless of the fundamentals. And I think, of course, we've talked about technical analysis and trends, and that's really what makes a huge difference. Because to give you a simple example, like Tesla, for example, here, went from like $180 to over $400, right? That's a 126% gain in just a matter of like 4 months. When the trend takes off, right, it can really do some crazy things, and that's what we're seeing with PayPal. That's what we're seeing with Enphase. But then on the other side, that's what we're seeing with Nvidia. A lot of these companies that are actually pushing up. Upstart went through the same process, right? It went up insanely well in 2021, right? 266% move in a matter of just a few months, 3 to 4 months. But then the overall trend was just absolutely collapsing here. This again, very nice rally, 400+%. So price action can definitely disregard all fundamentals in the short term. PayPal, 20 basis points. This kind of reminds me of that meme of Enphase and PayPal. Kind of reminds me of that meme where um, it's like you look at a small move higher of 0.4% and everybody's like, let's go, let's go. And then you kind of zoom out and it's down 60% or 70% from its all-time highs. It was more related to like crypto traders or crypto investors where they were like, oh, Dogecoin or something like an altcoin was up like 0.3 or 0.4% on the day. And then you kind of zoom out and you see like it's down 80% from its all-time highs. So it's always reminds me of that meme. On is looking really cheap. The recent pullback seems to be real. Overreaction, per my calculation, is way below its intrinsic value. Love to hear your thoughts. Let's take a look here. So on semi, wow, down to $62. Very quick analysis that we can do. $625 million in free cash flow. Let's see. So it's $625 million free cash flow. If you do a growth rate, so right now it's at $62. It would need to grow at 42%. Free cash flow would need to grow at 42%, discounted back at 12%, with a terminal growth rate of 3% in order for On to be justifying of its valuations today. Yeah, cash flow has been a little bit more back and forth, but let's take a look at net income here. So $2.23 billion, right? So obviously a little bit higher than free cash flow. So if you run that on 2.230, and they grow, let's say, earnings by, yeah, from an earnings standpoint, it certainly can be argued that it is undervalued because they'd only need to grow earnings by 7% or 6.5 to justify today's valuation at $61 or $62 per share. That's again 12% discount rate, 3% terminal growth rate, 10% margin of safety, and share dilution. Let's take a quick look. 434 down to 431 in the last 6 quarters. 418 to 431, but it's been very much back and forth. So I'll keep that at 0%. So yeah, $61 based on an earnings discounted model would be at those levels. But free cash flow is lower. And oftentimes, I mean, if there's a discrepancy between free cash flows and earnings, then the free cash flow model will definitely suggest the fair value to be a lot lower than the earnings multiple model. So that, depends on which business cycle the company really is in. And what's the most appropriate valuation model to use to understand what the intrinsic value is for that company. So anyway, so 10 more minutes left for the JOLTS numbers to come out. Markets are certainly seeing some momentum today. AMD is now at 4%. Not a surprise there, $102. NVIDIA is also rallying. Microsoft, we got Tesla. So most of big tech, Magnificent 7 companies pushing higher, with Enphase definitely selling off 5.6, 5.5%. Other stocks that are moving up, Micron very nicely. We got Adobe, Novo Nordisk, Vertex is up and rallying to the upside. InMode P is 8.4, P is 6.5. Yeah, it's just absolutely crazy. Vin, he's going to be talking at 2:30 p.m. Eastern. I will be live for that. So we'll be live at 2. I actually will be live at 1:30 p.m. Eastern, and then we'll be going all the way through 3:15, 3:30 p.m. So it'll be a longer 2-hour live stream where we cover the statement, we cover the market's reaction, we cover the Fed speech, and then after hours reaction, after the speech reaction. Abhishek, my workout routine and what you eat in a day. I used to cook a lot and then clean, but then it just takes too much time right now, and may get back into it like after a few months, but right now it just takes too much time to cook and clean and everything. So right now I do pretty much order a lot just to save time, so I can continue to focus on the work here. But no, I mean, it's pretty simple. It's just, whatever I'm in the mood for. So I only do eat, dinners, so it's not that complicated. So yeah, just order dinner and that's it. Yeah, small caps getting smacked. I think there may be some opportunities in IWM considering that, Russell 2000 is flat, in a lot of months, and year to date down about 6.9, almost 7%. So Russell 2000 significantly underperformed this year. Now, can anyone explain? I've already talked about this before, but can anyone explain why the Russell 2000 is struggling so much this year compared to the S&P or the Nasdaq? Bonus brownie points for anybody who can get it right, and then I will answer your question. We've talked about this before in our previous live streams, but I'm kind of curious to once again see if you can figure out why the Russell 2000 has underperformed. Yes, so Akash says small caps getting wrecked by interest rates, and Sanjeev says they are vulnerable to debt. Money is not cheap now. Exactly. So, when you think about these companies, large cap tech, they have the upper hand when it comes to investing the cash they have and earning an interest, right? Think about it this way. If Apple has about $120 billion worth of cash just sitting on their balance sheet, and they invest in treasuries that are yielding them 5%, right? That is additional revenue that the company is making, right? So 10% would be 12, 5% would be 6. So we're looking at $6 billion worth of extra income that the company was able to generate out of nothing. And Russell 2000, most companies aren't even worth $6 billion, right? So it's small caps, they've got floating rate debt. They're more vulnerable to higher levels of debt. They're not as profitable as big tech. So there's a lot of factors at play for these companies that, again, are dependent on interest rates and interest rates being higher. So it's kind of interesting how many parts or how many sectors of the market higher interest rates actually end up affecting, right? It's a lot. It's a lot of these companies and a lot of different sectors and markets that higher interest rates affect and really do crush these companies. 60% or more of them are losing money. Exactly. They're not profitable. So Rajat, what's my view on Apple stock? Done a couple videos on Apple stock already. I think the valuation, I guess you could argue a 29, 30 times multiple is reasonable, or some people could argue that it's not as reasonable. So I did a video on Apple stock that you should check out. So this right here is the full analysis on Apple just 2 days ago. And it goes over everything, like the entire breakdown of the company's fundamentals, hardware revenue, software services revenue, right? Install base, margins, and how margins have grown, multiples, the average multiples, and what's the intrinsic value, and everything is going to be calculated here. So, and I'm going to definitely put, more like in terms of SEO. So these videos are more findable for you guys, because I know a couple people reached out, I do post a lot of videos, so it becomes a little bit difficult to find these, but I will try to put as many sort of like ticker names and stock names in the title and the thumbnail as possible, so it's easier for you to find. So again, PayPal over here, Google, Apple here. We got NVIDIA analysis, PayPal again. Paycom just did that about an hour ago, so definitely do check that out if you haven't already. But a lot of these videos are already out there. Just simply search and you will find them. Okay, JOLTS numbers. I'm going to wait another few minutes until the JOLTS numbers come out, and then we'll call it for this live stream, and then we'll be back in a few hours for the Fed. Let me just open up my unemployment spreadsheet. Okay, what are we thinking for JOLTS? What's the estimate everybody has? The consensus 9.375 million job openings. And I want to know what everyone thinks for JOLTS numbers. Higher, lower, significantly lower, significantly higher. So Paylocity, PCTY. So Zenwood hitting its net liquidation value. Can you please take a look? Not yet. 650, close to $700 million is where its NLV is. So we're not there yet. So now sub $19. InMode registers a bigger fall than the market. Yeah, forward P of 7.55. This represents a discount compared to its industry average forward P of 17.65. Right now, there's an analysis that we are running. It's going to require a lot of time and effort, but we are getting it done. And what this is going to show us is how correlated earnings are to stocks price performance in any given year. So on a short-term basis. Because as we know that earnings is what Wall Street cares about. This is the only one metric that's important to Wall Street. And if earnings near-term visibility is really bad from companies, right? So near-term, I mean couple quarters, those stocks are going to get sold off. And that's happened, over and over and over again. But we're just trying to figure out what that correlation is. And we're going to put it into a nice spreadsheet and make it more available so that we can take a look. Because if I go over to Upstart, Upstart had some phenomenal 883% growth, 269% growth. And then that was pretty much the top. And then it started falling pretty aggressively as soon as the profitability collapsed for the company. Pass, thank you so much. I appreciate it. All right, so let's just reload the JOLTS numbers. Let's see where we're at. All right, 9.553 million, which was higher than the consensus. Not what we want to see. Lots of job openings, so 9.553. If I plug in that number here, 9.553, the ratio went back up to 1.5 right now. So that is, certainly not the best news. Suggests that the labor market's still very tight. We've got lots of job openings. Now, look, there's a couple different narratives at play here. Number one, you could argue that this is reinforcing a soft landing scenario where the labor market's really tight and inflation's coming down. And I totally would get that, right, where you'd be coming from. But every single time in the past, like when there's been a recession, soft landing, a key word, soft landing, has been mentioned over and over again. And eventually it never was soft landing and we ended up in a recession, right? So would this time be any different? Could be. Time will tell if it is or not. But a stronger jobs number for this, job openings increasing, that ratio once again increasing to 1.5, is really not what the Federal Reserve is trying to achieve. They're looking for an equilibrium in this ratio. So on Friday, when we get the unemployed persons report, unemployed numbers, unemployment rate, if this number increases to, let's say, 7 million, then yes, we drop down to 1.36. But if this goes down to, let's say, 6 million, then, of course, we are at 1.59. Make matters worse, let's say unemployed persons drop down to 5. Now we're almost back up to 2. And we were almost at 2. We were at 2.5, actually, before the Federal Reserve started raising interest rates. So this number, this ratio, was at 2.5. So we have already seen a significant softening in the labor market, but it still needs to come down to more equilibrium at close to 1 is what the Federal Reserve is trying to achieve. Anyway, so thank you so much for joining, everyone. I really appreciate it. Links to our Discord Patreon is going to be down below if you're interested in joining. Of course, November 1st is here. I am finalizing the intrinsic value MoneyVest fair value spreadsheet, which is going to be available for everyone. And that's basically going to show us the market price and the intrinsic value for each stock. And this is going to be like a 500, 700 stock list, which is going to be updated every quarter, so that you can keep track of the market price, the intrinsic value, and of course, do your own analysis and due diligence on top of that to see where you are with the analysis that we have on our MoneyVest platform. So thank you so much for joining. I really appreciate it. Link's going to be down below. And we'll be live once again in a few hours to cover the Fed meeting as well.